boy, ladies and gentlemen, we got a lot to go over on my financial independence, retire early journey. We're going to be updating you on what I think the markets are doing and why the heck are they up so much. I want to be touching base on one of your comments, explaining to me why you don't think I deserve the emergency benefit relief plan. We're also going to be taking a look at my $129,000 dividend stock portfolio, which I just took a huge punch on as I withdrawed the over-contributed room to my registered retirement savings plan. That ate through almost $1,000. And on top of that, I just finished paying my taxes, which completely drained my account to null. So ladies and gentlemen, I look so forward to breaking this down for you. So let's jump right into this.
Drop it.
Welcome back, my passive income investors. Before we get into the insanity that is going to be this video, I want to touch base on the S&P 500 because a lot of you think it's coming back with a vengeance, and I'm here to tell you, you're just plain wrong. Now, why are you wrong? We can only speculate on this, but with the S&P being down 14.3% year to date after being down over 30%, it don't make a whole lot of sense with the calamity we're about to run into with these first quarter earnings. And I keep telling you guys that you're going to have to wait to see some stability in this market as soon as those balance sheets start showing them numbers. But even with 3M unchanging their guidance, considering they're making like $300 million printing masks, and they're not really too gung-ho about all the products they're losing out on sales. So this doesn't look too good. It's not looking too bright. And what am I personally doing, guys? I'm going to be real cautious about investing into this market where it's sitting right now. In fact, all the money I'm investing for my family, my girlfriends, myself here, guys, I'm just saying, let's take it easy. We got some good discounts over the last couple of weeks, but where it sits today, guys, let's just see those earnings come in. We got Wells Fargo coming in on Tuesday. We got Johnson & Johnson. So keep your eyeballs on that because those two companies can really help gauge out the financial sector, the healthcare sector, and we'll see where things go from there. But we're getting a lot of earnings coming into the beginning of May, so I think the markets will find some stability through all of that. As I've told you guys, there's not going to be any real balance or any real leveling off until we know exactly where the economy sits. And considering we got more job losses than we did in the 2008 financial crisis by like fivefold, I mean, this isn't going to be good, guys. What we're seeing here is a little bit of a short squeeze from people that tried to short that bottom that got screwed. I feel bad for anybody that sold that bottom because now they're petrified, hoping to God the markets come back down. But like I said, just be patient, guys. Take it easy. I'm still cost averaging into this market. Don't get me wrong. I'm always buying stocks. In fact, I just bought a few, which I'm going to explain to you because it was set up on a drip. But let me get into another topic here before we start heading down the path of my $130,000 dividend stock portfolio. The next thing I want to touch base on here is the emergency benefit relief plan. And I made a video commenting about how I was signing up for the government benefit relief plan, and I got some interesting comments. One from Samuel Boyle here says, if you're making money on YouTube passive income, then how are you able to apply? For my reading, as long as you make at least $1 from self-employment, then you are not eligible. Also, if you're saying you'd use the money to invest, then it seems you shouldn't be eligible. I'm curious, as I'd personally like to apply, but I, like you, make self-employment income, so I don't feel I am eligible. So we started kind of arguing back and forth, and I kind of gave my just reasons behind this because I do think there are people out there that are more eligible for this. I'm going to explain this further, but let's just take a look at the emergency benefit relief plan. Who is eligible? Well, residing in Canada who are at least 15 years of age, who have stopped working because of the CV and have not voluntarily quit their job, and that also aren't claiming any other benefits, who had income of at least $5,000 in 2019 or 12-month prior period, and for subsequent benefit periods, they expect no employment or any other income. So look, this is really hard to gauge out, and I told them I'm not going to apologize for applying for this, but I also don't want to sound like a shrew. Putting aside the passive income in my portfolio, let's just start with the base aspect of my career being a magician. January and February are my slowest seasons. You guys know I barely made $500-600 a month off my full-time income. Moving into March is when my whole season kicks off. That's when I usually have over $3,000 worth of bookings, and then it just builds up as summer comes in. But what it looks like right now is I'm going to be making $0 off my full-time employment income from now until what seems to be May, June. And if you clock that in with how bad January and February were, it looks like I'm going to have 6 months of almost zero income off my primary source. Now, the government mentioned that you can't really be making money off any other self-employed things, but there's a real gray area with that, because let's just say you're self-employed, lost all your work, but the way you've been surviving is selling things around the house, and that gets claimed as income. I still think you're eligible to apply for this. And if we look at my passive income sources, yes, I am still bringing in, my stock dividend income. Yes, I'm still making money off this YouTube channel. And yes, my websites are just starting to pick up. These are all new ventures I'm kind of getting involved with, but just off the YouTube and the website, I'm only bringing in just around $1,000 a month, give or take. And with the stock portfolio, I'm lucky to be making somewhere between $1,000 and $1,500. I don't feel like apologizing because I have savings and I have a stock portfolio. As many of you know, I've made less. After my write-off and expenses, what I end up making at the end of the year, guys, is nothing. I already make less than $30K a year of total income after taxes, expenses. Like, I'm lucky to be making 10 to 15, which, living as frugally as humanly possible, I shoved into the markets over the last 5 years and made a lot of risky, self-assessed investments that turned out really well. So am I going to apologize for having a six-figure portfolio while I completely lose my cash flow? Absolutely not. And I 100% get that there are people out there that might need it more than I do, but the fact that my accounts have drained pretty much to zero at this point, because I don't like owing people money. I'm not one of those people. I really don't like having debt. I don't like owing the government anything. So I just finished my taxes. I finalized them. I gave the government most of the money I had left over, and I still owe the accountant. So as of this moment, I am heavily reliant on making whatever I can off YouTube, which is under $300 a month. And I don't know what my Shopify income is going to look like. It's very staggered and all over the place. And I don't want to have to rely on that because it's not going to make up my full-time income for the year. And I've had discussions with people in the government about this, and they told me I'm fine. I sit within the class of income. And he did make a relevant point here about how, I plan on investing some of that money if I do get it. And that is literally the purpose of this money, is to reinterject it into the economy. Whether you're buying stocks, you're paying your bills, you're getting groceries, or whatever you're doing with that money, still helping out the economy. And that is the primary purpose of it. But at this point, honestly, with the money I have, I don't really plan on investing a lot of it. I'm honestly probably going to sock most of it away as an emergency fund and just try and tread lightly through these difficult times, because we just don't know where the end of this tunnel lies. I'm not trying to be a shrewd here though, guys, but I'd like to know, do you think I'm being too greedy with the government? Do you think, the fact that I live at home and I'm being as frugal as I am, and the fact that I have no debts, that I shouldn't be taking this and leaving it for somebody else that deserves it more? It's been an interesting moral debate, in my opinion, and I'd love to know what you think about it. All right, ladies and gents, getting into the stock portfolio itself here, I went ahead and did some extreme work to give you guys a better analytical report on how my portfolio is doing. I went and took all my U.S. stocks and plugged them into our Google Sheets tracker here to see the U.S. side of my portfolio, and I used the iCloud numbers, which is better for the Forex tracking, and I plugged all of my Canadian stocks in there. So I'm going to go through with some of the stocks I've bought recently, what is going on in general in these portfolios. So taking a look at all my U.S. holdings, and it's really nice because I hold these through 3 or 4 different accounts. So I brought them all together here, giving me the exact averages on my cost basis. And if we scroll on over just to take a look at the wins and losses here, now that I've sold Facebook out of my RRSP, which I'm going to get into in a second, in total, I probably took about a 15 to 20% loss there. I'm still holding 8 shares, but I'm going to have to buy those back. So I'm hoping it comes down a bit, presuming that this market's a bit of a fake out. I don't know. We'll have to see what next Monday brings. But taking a look here, guys, my next worst hit stock, Wells Fargo, not really overly concerned about that, but it'll be neat to see the earnings that come in. Same with MO and BTI. I honestly think MO and BTI are ones, even though I'm down on, I'm not going to have to worry about. I'm expecting some incredible results out of these companies. So keep your eye out when those earnings come in toward the end of April, beginning of May. And then finally, my GEO group, which is down the most, which I'm constantly having a moral debate about, because I love the company's balance sheet, but there's a lot of hate around it. And I'm going to keep reinvesting the dividends with that one as well. But taking a look at the big transfer that I just did, and this is pretty incredible when I take a look at this, because as many of you know, I did excessively well on Tesla, not to keep gloating about it, but taking a look at my RRSP, I still have $22,000 in this account after pulling out like $5,600, paying almost $1,000 in withholding tax after taking that huge ding, which hurt a lot. But taking a look here, guys, that would have brought my contributed limit down to somewhere around, I think, 14,500, give or take. So it's nice to see that this portfolio is up so much, because, man, it was painful paying those taxes. So at least we're still getting some benefits here, guys. And taking a look, I still managed to keep a few of my Facebook shares in here, but I'm not going to be touching anything in this account. This account is going to be for the long haul. I just like having the tax advantages that come with this. I just transferred the money into my managed account. Don't worry, I'm going to update you guys when I purchase Facebook back, what I end up purchasing at. But overall, taking taking a look at a general overview of my portfolios and just how it generally looks with the US side of things, the majority of it is sitting in my tax-free savings account. And we can see the divide here. Actually, you know what I'm going to do? I'm going to scroll this over a bit just so we can see this nice and clear. And I love taking a look at this because it's really fascinating to see, basically take a look at the income by sector and then the capital allocation by sector just with my US holdings, because we can see information and technology make up about 43% of the US half of my portfolio, and consumer discretionary, being my BTI and my MO, make up really about 25%, which I really like seeing. But when we look at the income side of it, guys, the information and technology makes up about 9% of my total dividend income. So that's where the biggest discrepancy is, considering the consumer discretionary is the highest rated dividend, because I'm getting like a 6 to 8%, and I'm not getting anything with the tech. But those tech stocks are what is driving this portfolio and what gave me those incredible capital gains. So I think I found a really nice balance with stocks that I love, giving me about $2,687 or 223 US monthly. Now, moving into the CAD side of the portfolio, I didn't realize how little exposure I have to CAD until I see it really divided here. But I only hold Canadian Imperial Bank, Bank of Nova Scotia, Northland Power, and RioCan as my primary Canadian stocks. And all of these Canadian stocks just sit in my TFSA. And I told many of you guys I don't like holding Canadian companies because the dollar's been really weak here, and it continues to be weak. The oil sector's getting slaughtered. The service industry here is really good, especially looking at companies similar to like Shopify or ones that are on my buy list if they come into the right realm and they drop enough. But taking a look, guys, I have all of my Canadian stocks set up on a drip, and I actually just got some RioCan. It'd be neat to see what I actually ended up paying for those RioCan shares, but I'm really glad that even though I'm this broke, my literal emergency fund and savings account just pretty much got drained to zero, because I'd rather not owe the government money and just have my taxes paid and be broke than owe the money and feel like I have to struggle to pay them. Because again, I keep my expenses really low. But I'm glad that I've been able to get this drip set up, because if it wasn't for these drip systems and the fact that I'm able to make $400 to $500 a month in dividends, I would be dying inside. There's something weird about how when you start investing for a long period of time, that like it becomes such a forceful habit, and you actually start getting depressed when you can't keep up on your monthly plans, because typically I'm investing anywhere from $1,000 to $2,000 a month. And right now I'm only investing the dividends. And the one reason I've been able to invest a bit of extra money is primarily due to the fact that I already had savings in those accounts. But nonetheless, guys, I managed to pick up some RioCan with those drips. So it was nice to get 2 shares of that and all the extra money left over that couldn't do the share buybacks, because again, this is an M1 finance. So if your dividends are under the price of a minimum share, you don't do fractionals here, guys. So it just gets paid out into your account. And luckily, every one of these Canadian stocks are paying out dividends this month. So Northland Power, we're going to get some share buybacks, CM and BNS. So really looking forward to that. Now, taking a look at the portfolio overview on the Canadian half, guys, we're bringing in about $2,099. And the one thing I love about these portfolio trackers is when I actually went and looked at the dividend income, it was extremely accurate. Like it was almost down to the cent, which was really interesting to me. But on the Canadian side, I'm bringing in about $174 monthly, or annual income of about $2,099. And if we scroll this over, because many of you usually see my entire portfolio on my iCloud numbers, which we can't see here, I can only show you the general overview, which I'm going to minimize a bit just to make it a little bit more clear. And taking a look right now with the certain sectors, I'm sorry the color skews are a little off, because the sectors that I have in here show up as these kind of skewed color of the same orange and brown. But taking a look, guys, we can see that financials are the largest sector of my Canadian holdings, making up about 43% of the total portfolio value and about 48% of the total dividend income, with real estate and utilities making up the other 2 portions. So I only hold 3 sectors in the Canadian aspect of these stocks. If you guys would like these incredible stock portfolio trackers that we spent literally days, if not years, trying to analyze and build these things out, you can head on over to thechartmaster.com, where you can buy these things for $12. It's not like those stupid monthly renewal plans that you have to do with the online stock portfolio trackers. And this Google Sheets actually offers like so much analytical data. It is absolutely ridiculous. You can take a look at your year-over-year growth. And with the US tracker, we can even see the forecasted income, which is one of my favorite things about it. Unfortunately, the iCloud numbers just doesn't track it that way. Fortunately, the Google Sheets is the only one that can really take in the data points. So, I mean, I love this aspect of it, because you only have to plug in those basic stock symbols and what you paid for them, and it does all the work. And we can see typically the month over month is $167, followed by every quarter paying me between $3 and $350, which is really nice to see. And then we can also see the individual stocks and how they're paying out over those months. Really beautiful data points here. And if you wish to support me while I'm broke, I'm hoping this portfolio supports you as well, so I can give you some value in return for that $12. But to finish it all off, guys, like I said, I'm not going to be gung-ho about buying new stocks here. I don't mind doing the drip reinvestment because I love cost averaging in constantly, whether the markets are up or down. But any income I am able to put aside and invest, I'm going to be very cautious with and take it very lightly. Now that I've got about that $4,500 after pulling out all that money from the RRSP, I'm just sitting here watching Facebook, hoping come next week it'll be down. And then I'll share with you guys what I end up paying it back for. I sold out of Facebook at about 171, 172, give or take $1 there. So it's going to be neat to see if I end up paying a premium. So you got to remember how bad this sucks, because I already lost about 10% on the first 5,000 plus 20% on the other 500 extra I had to pull out, and then I paid federal income tax on that, and now I have to pay a premium to buy Facebook back. Trust me, the pain is there. But that's what stupidity costs, and then hopefully next year I can claim and get that money back from the over-contributed room from my RSP. But I'd love to know what you guys learned today. If you have any questions or thoughts, always let me know in that comment section below, and I'll have a good debate with you, just like I did with other buddy about me taking on those government benefit plans. But stay cool, stay awesome, and I'll catch you guys tomorrow.